So let's talk about the pros and cons of HEAs because I still hear it every single day. We've covered what an HEA is, right? Or an HEI. Now let's talk about the pros and cons because there's more to the story than the sales pitch or what you hear on TikTok, and it sounds good, right? But the upside is there is no monthly payments or interest. You have access to cash without perfect credit. It can be an option when traditional financing isn't available. However, there's always the reality, and the reality is that you're giving up equity now and later, right? So you're giving up 5 to 20% risk adjustment is what they call it, and it reduces your value from the very beginning. And so at the end, you have big balloon payments that are due at sale, at refinance, or the end of your term. If your home appreciates, you could owe far more than you receive, right? So contracts are largely unregulated and they lack foreclosure protection. So at West Capital Lending and Team Top Gun, we strive to make sure that your unique scenario is not only heard, it's valued, and we strive to make sure that you don't get put in these positions that later you may not be able to get out of, right? They're considering it now. These are terms and all the information that we've gathered. They're called silent seconds to a degree, right? It's not necessarily a silent second, but if they show up, it's hard to get out of on your report or they don't, and then there's a lien against your home. So I recommend that we do things right, even if it's a little scary to understand where we are at, what we're gonna do, but that is our job to make sure that you are okay.